Friends, there is an update with regards to a golden crossover pattern that you all can keep a track of. There are four stocks currently forming this golden crossover pattern. So I'll educate you all on, on what exactly is the golden crossover for those who may not be aware of it. So, golden crossover is used in the technical analysis of financial markets to describe a bullish move that occurs when a shorter term moving average crosses above a longer term moving average. So basically, the 50-day moving average, which is a short term, and 200-day moving average, which is a long term, this crossover is considered as a positive signal. So, for example, if a stock is priced 1000 rupees at a 50-day moving average and the 200-day moving average was about 920 rupees, so this 1000 rupees 50-day moving average is a crossover and a positive signal to the 200-day moving average of 920. So whatever volatility that it may have had in the last 200 days, it has been able to surpass the price of the average of 920, and the 1000 rupees is what brings the positive into play. So there are four stocks. One of them is Shriram Finance. It this crossover took place on the 16th of April. Price was 612 rupees with good volume of 6.57 million. The stock closed at 691 on Thursday, which was the 17th of April. Then which reflects a 2.3% increase since its crossover level. So Maharashtra Seamless is the second company. The crossover took place on the 16th of April. The price is 654 rupees with a good volume of 133,000 shares traded. The stock closed at rupees 699 on Friday 17th of April, reflecting a 3% increase since the crossover. Then you have Gallant Ispat. The crossover took place again on the 16th of April. Price was 347. Volume traded was 417,000 shares. Stock closed at 467, uh, 367.75 in Thursday session, reflecting an upward trend of 1.3% since is crossover. So Force Motors is the fourth company. The crossover took place on the 15th of April. Price was 7,544. These with a decent volume of 35,000 shares. The stock closed at 7,455 with a decline of 1.7%. The views and investment tips expressed by the investment expert, broking houses, rating agencies on the internet are of their own and not mine. Investing in equities possesses a risk of financial loss. Investors must therefore exercise due caution while investing or trading in stocks. The author is not liable for any losses as a result of the decision made based on this article. Please consult a financial stock broker before investing. So we'll go through some more charts. This is the logo of the Shriram Finance Company, the company number one. This was the price 703 rupees as of yesterday, 21st of April, up 1.63%. Then last 5 days, 10% up by 10%. So 63.63 rupees higher, 10%, which is a nice substantial amount. Then again, in the past 1 month overall, uh, value add of 3%. Then in the last 6 months, overall value addition of 8%, and in the last 1 year it's almost 45%. So the stock has been doing very well, and 45% is a good, huge return to have. Then we'll look at some other information. Ownership strength is slightly missing the benchmark. Stock is at a premium valuation at this point. The company could improve upon its asset employment, so company could use its assets in a better way. The company possesses stable growth history and sound profit margin, which is a good sign again. Price to book value 2.37, face value 2 rupees, book value 296, dividend yield 1.22, net profit 7,190 crores, Operating revenue 35,000 crores, promoter holding 25.4%, earnings per share 50.88, sales growth 17, return on capital employed again is good 15.7. Then Shriram Finance Ltd, the flagship company for the Shriram Group, is a major consumer finance, life insurance, general insurance, housing finance, stock broking and distribution company, India's largest retail asset financing NBFC, founded in 1979, caters to the small businesses. So commercial vehicle loans, business loans, deposits, working capital loans, life insurance, then high of 730, stock P of 16.3, book value 279, ROE 15.9 again, which is good. Stock is trading at 2.5 times its book value. Company has a low interest coverage ratio. Because it's a finance company, company has delivered good profit growth 23.4% in the last 5 years, maintaining a healthy dividend payout of 21.6%. Then you can compare the peers. You can see the stock P's which are above 30 is something that you need to carefully observe. Bajaj Holdings 18, HDFC AMC 39. So the industry median of 193 company is 23. So maybe you can look at Bajaj Holdings as an alternative to choose from. However, consult the financial broker before you make any sort of investments. The company has given a very good return and has been performing very well. So you can see between the last 3 quarters, you can see every month almost 600 crore revenue increase, which is a good sign. Net profit has increased by 1.6 times in the last 6 months, which is an amazing track record. So I hope the company is able to continue its peak growth trend, and if it does so, we will continue to see the stock continue with its bull run and perform very well. So something to look forward to. You can see overall revenue and details we've already gone through. Then year on year, you can see jump from 6,000 to 7,400, then from 7,400 to 9,400. So again, it's doing very well. Then you can see stock price comparative growth 45%, ROE 16%, compounded profit growth 25%, sales growth 19%. Then reserves have increased by 3-4 thousand crores, which is another positive. Then we look at the promoter holding 25.4%, FIIs, which has the biggest jump 53.4%. So as long as the FIIs stay invested in this company, you will see that the volatility of the stock would remain low. Moment the 54% shares are sold in the market and most of it is acquired by the public, then you will see the stock will have a very high volatility in the price as well as the overall holdings. So we'll move on to the next stock here. We have Maharashtra Seamless at 706 rupees, 1% upward trend in the last one day. Then you can see last 5 days almost 8.5%. Then you can look at the last 1 month 0.88%, a negative return here. Then overall in the last 6 months you can see 23% growth. Then overall in the last 1 year it's a negative return of 20%. So something that the company would be aware of. This is due to the market correction in the stock market, which is the reason why you have a negative return, and possibility it is something to do with the financial performance of the previous months or previous quarters that has impacted the share price. Then we look at the strength ownership is missing the benchmark. Stock is at premium valuation. Company can improve the use of its assets. Company possesses stable growth and manageable debt, which is a good sign. Then look at the price to book value 1.57, book value 450 rupees. Then overall you can see earnings per share 58, promoter holding 68%, sales growth of -5%, return on capital, return on equity of 19%, profit growth 23%, which is good. Manufacturers seamless pipes. This is due for renewable power portfolio. Welding resistance pipes, seamless pipe, weld joint in contrast to seam or welded pipe. So it manufactures pipes and it is mainly to cater to the power generation companies. Coated pipes, then it gives you the different uh, metric tons that it produces overall in Maharashtra, in Telangana, then solar energy, market share of 55% in seamless pipe segment, facilities at Nago, Thane and Manegaon in Maharashtra, Narkatapalli in Telangana, 18% in API certified high frequency ERW pipes in manufacturing facility in Maharashtra. Then you can see stock P 12.6. Then you can see return on equity 18%. Good profit growth 26% over the last 5 years. Almost debt free. Promoter holding has increased by 0.8% in the last quarter. And you can see market cap of the other companies. So most of them are steel companies here with a high market cap. You can see Sial, Jindal Stainless Steel, Maharashtra Seamless, which are below 20, and Jindal Steel 22 are the ones that you can compare and possibly check with an investment advisor. It is a good stock to invest in. Then you can see sales have grown in the last 2 quarters. Uh, Overall, net profit grew, but it has just managed to uh, not been able to manage to keep up with the constant profit growth. So net profit is something that would be the company that would need to keep and work on. If they are able to improve it over the next 2 quarters, then the overall sentiment of the company would increase. Then year on year profit again fluctuating. The current year seems to be below the profit that was clicked last year, FY24. So stock price minus 20% in the last 1 year. Then return on equity 18% consistent over the last 3 years. Profit growth minus 32% in the last 1 year. Again a concern. Sales growth minus 13%. So again another concern. Those are the two important points to drive a bull run in the market. Then reserves have increased by 250 odd crores, 215 crores, sorry. Then you can look at debtor days better, 35 days. Days payables slightly gone up. Inventory days also have gone up. Overall working capital requirements stayed steady here. So again, we look at the shareholding capacity 69%, FIs 9.6%, DIIs 4%, public 18%. So as long as the public holding reduces from here and FIs or DIIs add more value, it would improve the overall. Uh, it will improve the overall standing of the company. So, moving on, Gallant Ispat, 1% growth yesterday, 15% in the last 5 days, 32% in the last 1 month, 38% in the last 6 months, and 80% in the last 1 year, which is an amazing performance. We won't really take too much of time on this. Debt 461, cash 12 crores, sales growth 4%, ROE is a bit low 9%, profit growth 60%, which is a good sign. Comparative peers ranging from 6 to 20,000 crores. Then what is important is the ROE and ROCE. So you have most of the companies above 15, which is a good sign. Sorry, excuse me. So the companies to something that you can look into is the ROCE, which is beyond 20. something that can add really good value. So consult a financial stockbroker with some analysis and see how the company can offer you whether there is a great potential after the 80% growth in value in the last 1 year. So Sponge Iron, MS Village, TMT bars, food grain business of the company includes wheat flour products like atta, maida, suji, bran under the brand name Galant. In the states of Uttar Pradesh, Bihar, West Bengal, Assam, Maharashtra, Madhya Pradesh, Andhra Pradesh, and Karnataka. So it is into multi-category business segments. You can see most of the businesses to do with pellets, bars, and irons. It has a power plant as well. So again, which is something that can add good value. Stock P of 30. Uh, Company has low return on equity in the last 3 years. Market cap again comparative with the other industries. ROC is what is important as we discussed. You can see sales have been erratic, fluctuating. Net profit overall has grown in the last quarter, however, still below the last 6 months target or something that should have been the benchmark. 122 crores. Then net profit overall year on year, there's a good growth. So this will add to the positive sentiment of the company. Then sales growth 6%, profit growth 92% in the last 1 year, stock price growth of 80%, which is amazing as we discussed. So that is what will add to positivity of the company. Then ROE 10%. Reserves have grown by 170 odd crores, which is a good sign. Moving on to the debtor days improvement to 9 days. Inventory days have improved in the last 3 4 years. Days payable have reduced as well, which is an amazing sign. Cash conversion cycle 51 days, which has been sort of constant in the last 3 years. Then working capital about 80 days, and promoters 69%. Then FI is very small holding. Again, here this stock can be highly volatile with 31% holding by public. No FIs, no DIs investment here, so it's a cause of concern. Force Motors has been doing very well, 7.5% yesterday, 8% in the last Fridays, 5% in the last 1 month, 43% in the last 6 months, and minus 5% in the past 1 year. So overall, you can see the company has done very well in the last 6, 7, 8 months. It has recovered the trend in price over the loss that it had made in the last maybe 8, 9 months or 1 year. It has covered it up in the last 6 months. Then you can see ownership strength is missing the benchmark slightly. Premium valuation again inefficient. Okay, so inefficient use of assets need to really pick up on this and start working on it. Company possesses stable growth history and manageable debt. This is something book value 2028. So price to book value is 4.6. Brands Traveler, Monobus, Traveler, Trax, Gorka, Balwan, Cargo King, Urbinia, Cityline, Orchard, Sandman, Abhiman, Matador, Minidor. So very good brands that the company has, and comparative to Tata Motors, Ashok Leyland, SML Izu. So all good value adding companies here. You can consider a financial stockbroker. So you can see ROE also good. Apart from Olectra, Greentech, all the other companies are above 18 and somewhere in the range of 20 to 30, so which is an amazing sign. You can compare all these companies. Promoter holding 62, public is a high holding of 29, F5 and DIs hold about 10%. So again, the stock can be volatile because of the 29% public holding. Price can be unstable, and also high volumes of shares can also be traded here. The company has shown good profit of 78% in the last 3 years. Good revenue growth of 52%. Company has decreased its debt by 430 crores. So something for you all to look into. The other ratios, healthy interest coverage of 11, which is amazing. Then basically flagship company of Abhay Firodia Group, business vertical of manufacturing, small lightweight CVs, multi-utility vehicles, agricultural tractors, supplies to Middle East, Asia, Latin America and Africa. It was earlier called Bajaj Tempo till 2005. Then again, this is something that we've been through. This is what is something that is important. Quarter on quarter, uh, more or less stable revenue, no increase in revenue. Profit has been slightly up and down, but still around the average of 120 crores a quarter. Then you can see net profit over the last 12 months has increased from 400 crores to 500 crores, which is a good sign. Then look at sales growth 19%, profit growth last 12 months 77%, CAGR 6%, negative return, then return on equity of 19%. So overall, decent improvement in the performance on ROE, and the reserves have grown slightly. There is a high chance of this growing and improving over the next few quarters. So thank you friends for watching. We'll connect with another video soon. Thank you for watching. Take care. Have a good day.